Un saluto a tutti e ben ritrovati, sono Sergio Cordua, Sales Manager di Fineco Asset Management ed in questa videopillola faremo il punto sul segmento corporate dei mercati obbligazionari con la partecipazione della nostra Credit Portfolio Manager e Sustainable Investment Lead Helen Dodd.
"2022 has been one of the more challenging years for markets, as investors sought to navigate not only global central bank regime shifts, but also the impacts of war, the energy crisis, and the effects of spiraling inflation. Looking into 2023, the expectation is for market focus to shift away from monetary policy and systemic risk and move towards single name fundamentals and genuine risk-adjusted returns. On the upside, it appears that inflation may be close to peaking and that global central banks are approaching their terminal rates. The risks of energy rationing are fading and selected signals from market technicals are more constructive. Against this, the expectation remains for a mild recession, which could put pressure on weaker balance sheets, and we could see an increase in defaults. In this context, we believe high-quality investment-grade corporate valuations are compelling in both absolute and relative terms and can provide attractive carry and upside returns potential. Conversely, given expectations around the macro backdrop, high-yield issuers could come under renewed pressure, and we are likely to see increased idiosyncratic risk and performance dispersion among individual issuers. For European investment-grade valuations are compelling. After the spread widening of 2022, valuations are historically attractive on both absolute and relative perspectives. 2023 market supply technicals are expected to be more supportive as projections for net primary market supply are manageable. We expect to see greater market dispersion, both in terms of balance sheet fundamentals, but also on credit ratings and on security format. Higher rated, better quality issuers are likely to outperform. We expect to see spread decompression between BBBs versus single A rated issuers. Callable format subordinated securities, such as corporate hybrids, may continue to see volatility as the market assesses issuers' potential willingness and ability to call bonds, as well as the threat of extension risk. That said, single name fundamentals will be key, and we can expect material performance dispersion. High yield has benefited from shorter duration, but as we shift focus to fundamentals, we do expect to see an increase in defaults, albeit from historically low levels. Current projections suggest around 3%, which is expected to be manageable. We anticipate an uptick in credit ratings downgrades, with net ratings migration for both investment grade and high yield issuers. High yield is expected to underperform investment grade, with further underperformance in lower rated issuers. With this in mind, the Fineco Asset Management European Corporate Bond Fund will be positioning with a higher quality bias. We continue to prefer investment grade over high yield, and will be overweighting single A versus BBBs. From a sectoral perspective, we continue to prefer investment grade banks over investment grade corporates. We see value in senior bonds from national champion banks with solid credit ratings. We prefer larger telecoms, metals and mining, and oil and gas issuers over sectors that are more exposed to discretionary consumer behaviour, such as autos, media, retail and transport. We will be very selective in short-dated callables. As we enter the new year, the fund has a yield of around 4% and a duration of around 4.5 years. Thank you very much for listening, and see you on the next video pill. Bye-bye.